to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, this week's market wrap with commentary and analysis from Money Metals Exchange, the company named Best Overall Precious Metals Dealer by Investopedia.
Happy New Year and welcome to this week's Market Wrap podcast. I'm Mike Gleason. Coming up, don't miss a special interview with Money Metals CEO Stephen Gleason. Stephen gives our listeners an inside look at the market from our perch atop the retail U.S. bullion industry, including some interesting changes in both buying and selling patterns we've been seeing lately. Stephen also breaks down his top 5 tips for precious metals investors in 2025, especially newcomers to this growing market. A couple of those are particularly important because failing to heed them could actually lead to some big mistakes and financial losses. So be sure to stick around for a conversation with our CEO, Stephen Gleason, coming up after this week's market update. Well, gold and silver have been trading quietly, but with an upside bias this week as we turn the page to the new year. But oh, what a past year it was for gold and silver. Gold delivered a stellar performance in 2024, surging more than 27%, its strongest annual gain since 2010. Silver did well too, but ultimately could not keep up with gold, gaining about 19% on the year. Those are big gains, but this banner year for precious metals was overshadowed by even bigger gains in the general stock market and Bitcoin. Silver is the metal to watch going forward, as outperformance by the poor man's gold would signal that things are really heating up for this sector. Silver lagging gold is further evidence that we're only in the earliest stages of the bull market for bullion. From here, though, it may take a cooling of the stock market and a weakening of the Federal Reserve note dollar versus other fiat currencies before gold and silver surge much higher. Gold's strong performance, while the dollar held up well, has been unusual. A reversal lower in the dollar would create a tailwind for gold, silver, and commodities in general, and that's something we do foresee happening in 2025. At the moment, all markets seem without a clear direction. They're essentially in a wait-and-see mode while the new Donald Trump administration is installed this month. The next few months should certainly be interesting. In terms of the weekly prices during this shortened holiday week, gold is up about $20 or 0.8% since last Friday's close to come in at $2,654 an ounce. Silver, meanwhile, is up 1.2% and comes in at $29.95. Turning to the PGMs, platinum is up 1.3% to trade at $954. And finally, palladium commands $965 thanks to a 1.5% weekly advance as of this Friday morning recording. Well, now, without further delay, let's get right to our exclusive interview with Money Metals CEO Stephen Gleason.
Greetings, I'm Mike Maharrey, a reporter and analyst here at Money Metals, and I'm here today with Stephen Gleason. Stephen is the president and CEO of Money Metals Exchange, aka my boss, and happy to be talking with you today. How you doing, Stephen?
Hey, Mike. Happy New Year.
Happy New Year to you.
Great to be on your show.
It's great that you have a show that we can be on. I really appreciate it. It's been fun. It's been a learning experience for me talking to different people. So that's the beauty of being an interviewer. You learn as much as the audience does when you're talking to folks. So that's pretty cool.
Yeah, we're getting a lot of great guests on, and thanks to you, we're really covering a lot of ground with the guests all year, all last year. So
yeah,
looking forward to. I know we got a few people booked for the next few weeks that are going to be really interesting. Some new people, and looking forward to that.
Yeah, absolutely. Well, let's kind of dig into the topics of the day, and since we're heading into a new year, we're right here at the beginning. Kind of looking back, we had a huge increase in the price of gold, big bull run, and I'm curious, just from a dealer standpoint, how has that kind of translated to the business side and from the perspective of physical demand here in the U.S.? I imagine it's kind of a mixed bag. When you get prices going up, I think that may create some benefits and then create some headwinds as well.
Yeah, it is a mixed bag, like you said. I mean, the reason for the price going up was not because of U.S. demand or even Western demand. It's been central bank demand. It's been Asian retail demand, institutional demand, mostly outside of the traditional, Western parts of the world, meaning Europe and the U.S. And, we did see a lot of retail and general demand in the U.S. in 2020, 2021, 2022. really kind of slowed down starting right at the end of that bank run situation we had at early 2023 with the regional bank crisis. There was a lot of interest in the U.S. For gold and silver, physical gold and silver, both from a retail standpoint, from ETFs and so forth. But really, just the year and a half since then, which is when we really saw the big price moves in gold and even silver, was not driven by Western demand. So we saw a big run up in prices starting at the beginning or the end of 2023 and going into 2024, and then an acceleration in the second half of 2024. Those led to, believe it or not, actually more selling than we'd seen, more selling from retail investors, even the ETFs and so forth. They finally started seeing a net inflow of buying, I believe, last fall. On the ETF side, we still have a big flow of new customers coming in, but there was a lot more selling. And I think it was a result of people who were sitting on gains, especially in gold. And I should mention, it was mostly gold selling, not silver selling. But there was more gold selling than we'd seen. We were still selling to customers more than we were buying, but on the whole, it was more selling back than we saw. And I think it was people sitting on, 30, 40% gains, maybe some impatience or frustration over the several years where, the expectations were high, but the price wasn't really moving. And then it moved big time and people were going ahead and taking some profits, or they needed the money. There's lots of factors, but it's been a very different environment for dealers in the last year here in the U.S. than it was, say, in 2020 or 2021, when it was just overwhelming demand, shortages, higher premiums. I guess the upside of the higher selling that we've seen back where people are disgorging of some of their holdings is that's caused the premiums to come back down. Mints have caught back up. In fact, mints are quite slow right now because there's so much metal that has come back, and therefore the secondary market is fully supplied, and that's caused premiums to fall, which has led to some really great deals. That now we're finding that people who are entering a position in gold or silver at least are paying a really very modest spread above the spot price, and that means they're putting most of their dollars into the actual metal. We have seen a little bit of a shift again since the election.
I was going to ask.
Yeah. So that's another factor. That's potentially a new economic environment, or certainly a new perception of where things are heading. We saw a little bit of I would say a 2 to 3 month run up in demand going into the election, where especially with the assassination attempt and so forth, there was a lot of anxiety. There was bigger buyers coming in. We still saw more selling than usual, but we saw 2 or 3 months of really strong buying. And then since the election, I would say it's been quieter. We still have very high transaction volume, but the dollar amounts have been a little lower. And I think that the edge has come off and people are sort of in a wait and see mode. And, of course, we have lots of crazy things happening in the economy. We have ramping up of war drums, lots of things. But I think there's a little bit of a sigh of relief among many of the traditional retail investors with the election of Trump. And then we'll see what happens, as we head into 2025. But one thing we've learned in this market is that pretty much anything can happen that changes the dynamic, that it's almost like a light switch. Things will happen, black swans, unexpected things, and then everything changes quickly. And it can be tough to manage, frankly, because the flows are so dramatic and shifting.
Yeah. I think a lot of people with the election, I think there was a lot of anxiety about, are we going to have a hung election? Is this going to draw out? And when it was, relatively pain-free in terms of just the election process, I think that was a big sigh of relief for a lot of people.
Yeah, I think we were all just kind of like, wait a minute, where's the controversy around the result we were all expecting? Yeah, so exactly. I think that caught a lot of people off guard, which is interesting.
The other thing that I think is kind of interesting is you mentioned the big drive of demand being from the East and from Asia. And that kind of slacked off as we got into the late summer and into the fall. And that was, I think, a lot due to price sensitivity over there. And now we're starting to see a little bit of a shift back to where I just did an article today about Chinese demand has really picked up in the last, starting in November. So, and we've seen that the Chinese central bank start officially adding gold to their reserves. And of course, we know that they're adding plenty of gold outside of that. But it's interesting that it's almost like it's kind of rotating back to what we were seeing early in 2023.
I think some of it, China was a little bit cute about their accumulation. Our investigative reporter, Jan Neuenhaus, really kind of dug into the import-export statistics, and he found that, in fact, China had been accumulating pretty much all along, even though they weren't really publicly disclosing it. But what would be really interesting is when you have, and if you have, both the voracious demand in the East and from the central banks, which is huge, and obviously that's what's driven these big price moves in the last year, especially in gold. And obviously the silver is a little different.
Right.
But if you add the retail in and you add the West in, and now you have everybody buying, that is a combination that we haven't really seen. And so if that were to happen, then that's, I think, when things get really, really interesting. Because that's pretty rare.
Yeah, I agree completely. So one of the big things for us here at Money Metals over the last year is finally able to open the new bullion depository, and I guess the best way to describe it is big. Can you kind of tell folks about that? Because I think it's a really exciting thing.
Well, it's a culmination of a multi-year plan on the part of my business partners and I, and just response to the overwhelming demand that we've seen from our customers, but not just for physical gold and silver, platinum and palladium, but also for storage, and even in some cases, people who want to borrow against their gold and silver for business purposes. It's a much smaller thing. Most people don't do that. But most people aren't even eligible necessarily, but the storage business and people accumulating gold in a safe place outside of the banking system, outside of Wall Street, outside of New York, in Idaho, where our facility is, where there's a freedom-minded citizenry, there's a lot of armed people, there's low crime, and it's away from a lot of things that people are worried about, i.e. Washington, D.C. and the politicians. And so we've had just a tremendous amount of demand for storage space in our facility. And that's what drove the decision to build this massive 40,000 square foot depository. And it's the largest facility outside of New York, basically. And in terms of a private facility, it's twice the size of Fort Knox and the vaults at Fort Knox. Unlike Fort Knox, our gold is audited. We have both independent audits and internal audits all the time. We know it's all there. Our customers can come and even, view their holdings. They can do that remotely via Zoom or whatever, but also come and bring, see their containers. Everything is in traditional accounts is in segregated physical containers. So I feel like we've really built a tremendous integrated depository system that allows people not just to have low-cost storage that's highly secure, and so forth, but also the liquidity of being able to sell it back and get good pricing directly from Money Metals if they want to sell back to us. They don't have to. If you store with us, you can sell to anyone. You don't have to sell it to Money Metals, but it's pretty convenient and fast if you do, and the pricing, of course, is pretty much at the top notch, competitiveness. So, the whole combination has really been successful, and we're excited about the future of that. We have a massive amount already in our facility, but the amount of space that we have, especially when it comes to gold, allows us to get into the hundreds of billions of storage if it gets to that.
Yeah. And it's really, like you said, it's really nice in terms of just making it easy to do transactions. So, if you want to buy and sell quickly, or even we've talked a little bit about, and I've written about folks who might want to lock in crypto profits. And, you can do that easily because Money Metals does accept payment in various cryptocurrencies. Right, so you can easily move in and out of gold and cryptocurrency and kind of use that as a way to hedge your earnings and kind of mitigate some of the volatility you get in those crypto markets. So I think that's a real big plus of having that kind of in-house storage.
Yeah, the part of the problem that we saw in the industry, and part of the reason that we built our depository, which we originally built in 2017 in a much smaller facility, and integrated everything from a system standpoint, is that most dealers, you're dealing with multiple parties, and the customer is really kind of in a tough spot because they're talking to the dealer, then they call the storage company, and then
Right.
they're figuring out the storage company is not talking to the dealer, and they're trying to coordinate, and it's very inconvenient. It's slow, and it's the same thing when you sell. It's the same rigmarole, and so having everything under one roof, dealing with a cluster of companies that's providing this as a service is just very convenient, and it's amazing. Our competitors, of course, it's not that amazing. It's not easy to build your own depository,
Right.
but it's certainly a service to the customer, we think, and we feel like we're doing a very good job with just making it seamless. Now, obviously, if you're holding physical metals, you shouldn't really be trading those. I mean, there are transaction costs, and if you want to trade metals, I wouldn't recommend, meaning buying and selling frequently. I wouldn't recommend holding physical, because the transaction costs do end up, even though it's efficient, it's not that efficient. That's where you use the electronic platforms and ETFs and so forth, which
Right.
isn't recommended for a long-term hold, but there is some convenience there. But putting that aside, we're very smooth. The whole process is very smooth because we're integrated.
Yeah, and you're also eliminating the shipping middleman, and that's
Right.
that's particularly poignant to me right now because I sent a package to Canada right before their postal strike, and it is still.
Yeah.
So who knows where it is.
I know. I sent a check to Canada to a business counterparty up there, not related to Money Metals, but on the personal side, and boy, it hasn't arrived. It's been like 5 weeks.
Yeah.
And they seem to be perfectly fine with that up there. Like, oh yeah, the strikes happen all the time. I guess it's the unions have even more of a stranglehold up there as they may have here.
I guess so. Well, it's not all right when you're in a hurry to get your package to someplace.
Yeah.
But so let's kind of shift gears a little bit as we move into 2025, and we just published a pretty cool argument, not an argument, an article at moneymetals.com/news that people are going to want to check out. But I wanted to touch on some of these things because they are 5 precious metals tips for 2025, and I think it covers a lot of important ground. And I kind of wanted to go over those with you and get a little bit of your insight real quick on some of these things. And one of the first things that you say, and this is almost counterintuitive, I think, to a lot of people, but avoid precious metals dealers who are advertising on TV and using a celebrity spokesman. Now, you might think, well, hey, celebrity spokesman, that's, they're trusted. Well, why would we not?
Yeah.
Why would we not believe our beloved celebrity?
Yeah. Well, unfortunately, this is almost without exception. This is this is a business model that a certain sector of our industry has. And that is to go on TV with celebrity spokespeople that they pay big endorsement fees to, because these people aren't cheap. These are celebrities. They're former actors, they're talk show hosts, and get them to be your pitch man for gold and silver. Use that trusted relationship that they have, trusting relationship with their viewers or with their fans, and then encourage people to get a free investor kit on gold and silver and set up a gold IRA and so forth. And these, I don't really fault the spokespeople because they don't, well, I mean, I do and I don't. I mean, they're not experts. They don't know the industry. They don't know that some of these folks are bad actors, really bad actors in some cases. And they're trying to monetize their name and their fame. And of course, there should be some due diligence. Hopefully, and some of these folks have, at times pulled away, but as they find out. But what really, on the one hand, I'm obviously very much in favor of people being told about the benefits of gold and silver and the wealth protecting and inflation hedging benefits and so forth, and the the type of investment that's outside of the financial system and that's doesn't have counterparty risk and all that. And that's all great. So the messaging is fine as far as it goes on TV. But when you get into these sales funnels for these firms, you find that you get turned over to a commission-based, very aggressive sales staff that will hound you and try to get you on the phone, try to get you to commit, try to sell you on something. And usually, unfortunately, what they're doing is putting people into high premium marked up rare coins, proof coins, special commemorative, polar bear bullion coins at 100% over the price of gold or silver. And this is a self-perpetuating problem because the margins are so high that the profits are therefore so large, and the commissions paid to these very aggressive salespeople are so large that, first of all, they're successful, and second, the celebrities, that's how they get paid. It's not cheap, number one, to advertise on Fox News, and it's not cheap to have some famous person as your spokesperson.
Mm-hmm.
The only way you can do that is if you're taking a huge pound of flesh out of your investors, quite frankly.
Yeah.
And this is how we launched Money Metals in the first place, in opposition to this.
Mm-hmm.
We saw this happening. This has been going on for longer than 15. We've been in business for 15 years. And I saw this kind of thing happening, not just on TV, but other variations of this with celebrity spokespeople, high pressure salespeople, boiler room operations. And, bullion, which is the coins, bars, and rounds that are priced based on basically the metal value, the melt value or the spot price, and with a small premium, and it does vary from item to item, but it's not extreme, and it's in some cases it's nil. But these are the things that people should be buying, but the margins for the dealers are very small. The dealers that sell those are very small. The margins for these TV-based, proof coin selling, rare coin dealer type people are massive, 50%, 100%, 200%. And we've unfortunately seen a lot of negative blowback on the industry from regulators, from law enforcement, and lawsuits from private parties and so forth. And it kind of gives the whole industry a bad name because a lot of people are getting ripped off. Mm-hmm. And so anyway, I think I'm not saying that every single dealer on TV is doing this, but I think as a general rule of thumb, if you see somebody advertising on TV with a celebrity spokesperson, do not buy from them.
Yeah. I think the other thing people should be aware of too is just that whole bait and switch thing that you get. They'll advertise something, maybe a gold eagle or something that's real common and a low premium, and then they get you on the phone and they upsell you to, like you said, the polar bear coin that they're going to make this big markup on, and
and we see this stuff come back. So like somebody sells it out of their IRA later, and I've seen these invoices that have come, they send, here's what I bought, here's what I paid. It's like, oh, wow, geez. Yeah. There were some 10-ounce bars in there that were reasonably priced, but these polar bear bullion 1.5-ounce polar bear, Canadian special run Royal Canadian Mint coins that you paid 100% over spot. Gold has gone up about 100% since you bought those. So you're going to get your money back, but you didn't double your money. And of course, most of the time there's losses because the margins are so wide. It takes so much of a gain in price to break even. And it's really it's heartbreaking what is being done. And we encourage people, learn how to figure out what the melt value is. Mm-hmm. What is the spot price? How many ounces are in this? And what is the difference between what you're being asked to pay and that spot price?
Right.
And as long as you're paying a relatively close margin above that, and occasionally below, but usually not, but understand what that delta is, and also ask the question: if I were to sell this back to you today, what would you pay me?
Yeah.
And then you know what the spread is. Right. And obviously you can't hold them to that because market conditions change. 3 years from now or 3 months from now, it may be a different price. But you should be able to find out today. If I buy this from you for X, what X minus what is how much you're going to pay me when I sell back today.
Right, exactly. And there's nothing wrong with if you want to buy the polar bear coin because you think it's cool.
Right.
But you need to understand the purpose of why you're buying this particular product, and that's one good thing about the folks at Money Metals is they can help you make those determinations about, hey, what's going to be the best that we can do, because they're not trying to upsell you to some crazy thing. Another thing that was in this article that I thought was interesting is that don't overlook the benefits of fractional gold. And that's something that I honestly don't know a whole lot about. So what are the benefits of maybe getting some fractional gold products?
Well, I think one of them is that you can get gold without having to buy a full ounce, and a full ounce now is $2,700. So it's beyond the reach of many people, especially if they want to buy very often or buy now. Of course, silver's there, and we can get into that too. But in terms of gold, you can buy a half ounce gold round or gold bar or 1/10 ounce silver or gold coin. At a reasonable price. It's going to be more percentage-wise over the spot price than a 1-ounce bar or a 1-ounce coin, certainly more than a 5 or 10-ounce bar of gold. But it allows you to actually get your money out of Federal Reserve notes quicker, sooner. And when you sell back, typically the fractionals will have a higher premium, meaning they'll pay you more than spot when you sell it back. That said, I wouldn't put big money in fractionals, because if you have bigger amounts, you should buy 1-ounce coins and bars or 5 and 10 ounce. But if you have smaller amounts, fractionals are fine, and it allows you to accumulate more quickly. So other people look at it also as a potential barterable item. So in a real difficult scenario where you're actually having to spend your gold, it has the benefit of being a smaller increment. Again, silver plays a role there as well. There's also something called the gold back, which is using a technology that highly fractionalizes gold into these bill or note shaped objects that you can put into your wallet. And so that's an interesting fractional product. The premium is not that high given the technology and how small. But that said, it is there. So for example, a 1 gold back, which is 1/1000th of an ounce of gold. So that's about $2.70 of gold. You're going to pay almost $5 for that. So you see that is a pretty big markup percentage wise, but the benefit you're getting is a highly fractionalized form, and you probably can sell it back for way over the spot price.
Yeah. The cool thing about those two is I had actually somebody pay me for something in gold backs. And the gold backs that I received from that are worth a good bit more now than they were when I got them a couple of years ago, because the dollars keep devaluing. I mean, the moment you get that dollar bill in your wallet, you're losing purchasing power. So definitely something to think about. And you mentioned silver. We'll kind of wrap it up with this. You said don't forget about silver, and I think a lot of people do. I mean, I even do it when I'm writing. I tend to focus on gold. But how do you see the silver market kind of playing out in the next year or so?
Well, I think one way of looking at silver is leveraged gold. And leveraged in the sense that it goes up more than gold in a bull market, and it goes down more than gold in a bear market.
Right.
It's a smaller market, so it's more volatile, and the leverage in the market allows for increasing that volatility even more, and in the futures market and so forth. A little bit of money can move that market. It's not nearly as big a market globally as gold is. That said, silver, I believe, is more undervalued than gold. You can see from the ratio between the two, which is in the mid 80s. Might actually almost it's even higher than that. It's near 90.
Yeah.
That's a historically very high ratio of the price of gold to silver. And typically in a bull market, as it matures or develops, halfway through or thereabouts in a bull market, silver will start slingshotting much faster up. And we haven't not seen, to the extent we're in a bull market in gold, and we definitely are in the last year with the breakout above 2000. And we have seen silver move during that period of time, but it's barely kept up with gold. And that tells me that the bull market is still very young, because silver starts outperforming later. Yeah. I really like silver because of the other variables around it. Number one, it's one of the lowest priced commodities compared to what it was in 1980 I think it's the lowest. It's actually done the worst. So maybe that's, not good for silver, but in terms of its potential, I think it's highly undervalued. There's some interesting supply demand characteristics. One is it's supply inelastic, and it's demand inelastic, and most of its production comes from byproduct of other metals. And so a higher silver price does not really necessarily bring out more silver, because most silver is produced by copper mines and zinc mines and gold mines and lead mines. And those are the economics that drive those mines, not the silver price. So you could have silver go to $50 or $100, and it won't make hardly any difference in the financial incentives around silver mining, because 80% of it comes as a byproduct. So that's one thing that makes it very interesting. One of the reasons it could be such an extreme reaction when it finally does take off. Another is just the utility of silver and all the different things that it's being used in, from solar to electronics to medical uses, because of its properties as the best natural biocide. It's the best reflector of light. It's the best conductor of electricity. It's money, which is sort of coming back as the idea that silver is slowly being remonetized, or at least in an investment sense, maybe not in terms of being added to the currency again. But it has both the monetary qualities and then these incredible industrial benefits. And so that just makes it a metal that gets whipsawed around a lot. All these things make it very volatile. But I think for longer term money, you definitely want to have exposure to silver. And so there's been a lot of talk about gold. Gold's at all-time highs. Central banks are accumulating gold hand over fist. Silver is we just don't think you should forget about it. And I would say about 30 to 40% of our total sales volume in dollars is in silver. So it is dominated by gold. But I do see that changing. And I think, as it really starts performing up to the expectations that people have, and then maybe even exceed those expectations, we'll see a lot of new demand come in. We haven't seen that yet. Yeah. But silver has been holding its own.
Silver's my apocalypse, hedge. That's the thing that I think that, if we did have a scenario where you had a true meltdown of in society, and I'm not saying that that's necessarily in the cards, but you can't ever rule it out. I definitely want to have silver, because I think that's going to be the easiest thing to barter. And as you mentioned, it is money. It is fundamentally money, just like gold is. And I thought it was interesting. A few months ago, Russia announced that it's going to begin holding silver in its reserves. So, it'll be interesting to see if other countries maybe follow suit on that.
Well, it's a strategic metal. It has, because of these properties, and even if it's not a monetary reserve, it has vital uses. It's not easily replaced.
Right.
And I think, with the emphasis around high technology and AI and solar and all these things that are sort of developing, silver is a big part of all of that.
Yeah, and it's huge in defense as well. I mean, a lot of weapon systems and missiles and all of that type of stuff are pretty silver intense. So I'm bullish on silver as well. So let me get you out on this one last question, and you can make this pretty quick though. But what is something that you're kind of eyeballing as we move into 2025 that you think a lot of people are missing in terms of the gold and silver market, or maybe even just the economy in general?
Yeah, I think that interest rates. I think that we've had a little bit of a cooling in the markets because of a concern that the Fed is not going to cut rates. Mm-hmm. I personally believe they're going to be cutting rates like crazy. And I think that that's going to just put fuel on the fire for inflation and gold and silver prices. When it becomes clear that they're going to continue cutting rates and cutting them dramatically, and that they're willing to accept high levels of inflation, and they're willing to accept higher long-term interest rate, they're willing to accept the consequences of cutting on the short end, which might mean that the long end goes up. I think they're perfectly comfortable with that. I think they're right now posturing that they will be less aggressive on rate cuts, but I think that's out the window. The amount of debt that has to be financed, inflation is the only solution to this. Yeah. I mean, and once the people realize it's all a charade, this whatever hawkishness that they're trying to put out there, I think that's going to be kind of a switch flipping towards hard assets in general just going crazy, and gold and silver will probably be the biggest beneficiaries of that.
Yeah.
So I think that's what I look to see by the end of the year. I'm not necessarily saying we're going to see, big rallies here in the spring, although seasonally you do see gold and silver do well in the spring. But I think a lot of it's being driven by the Fed, unfortunately, and I think a misunderstanding that they really have no choice. They're going to have to inflate and they're going to have to cut rates, and hard assets are going to boom when that happens.
Yeah, I'm in complete agreement. I tell people all the time that we have a debt-riddled bubble economy that is addicted to easy money. And you can't take the drug away from the drug addict without doing serious damage. And I think they're aware of that. So they're trying to jawbone and make everybody think, oh, yeah, we're worried about inflation. But I think you're right. When it comes down to that choice, they're going to pick inflation every time. So
yeah, and just sort of one aspect of that, there's been a lot of optimism around the cutting of the federal government and the idea that we can make it more efficient. And obviously there are some opportunities, and hopefully some things will be done. But I think that the optimism is way overblown of what can be achieved there. I spent 15 years working in Washington in public policy, and it is a road with no turns from the federal bureaucracy, the federal spending. It's a one-way street. They can't stop it. The bureaucracy is completely uncontrollable. You have bad laws, and then you have people that are big government people managing those bad laws. And there's many layers of entrenched bureaucrats all the way down. Even if Trump and all of his politicals, got all in place and they're all in sync, to be able to change the direction of that with all of these people undermining you at every step, leaking to the press, cutting your throat, absolutely refusing to do what they're told to do. They can't be fired very easily, if at all. Civil service protections, unions. I mean, anyway, so that's another maybe aspect of this in terms of the federal budget problem and the deficits. I don't think that we're going to be that successful in reducing government, or, we may slow the increase, but I have to be, unfortunately, I'm pretty cynical about the potential there.
Yeah, I'm with you too. And it's not, people, I've said that to some people and they get mad because they say, well, you don't believe in Trump. It's not even that. It's as you say, it's the structural integrity of the system. It is what it is. And I like to use this analogy. You've got a car that's broken down on the side of the road, and the battery's gone and the tires are blown out, and you're not going to fix that by putting a new driver in the driver's seat. The problem is more fundamental than that. I think,
as much as I'm very enthusiastic about what he stands for when it comes to pushing back against these things, and with Musk and Vivek and all that. I mean, I'm rooting for them, but I'm keeping a realistic view, I guess, is a good way of putting it.
Yeah, absolutely. Same here. Well, I appreciate you taking the time out of your busy day to chat with me. And normally at this point, I ask people to point where they would like people to go, but moneymetals.com is the place.
That's the place.
You'll want to check out our news section, and we have great articles on there every day, just like the one I referenced. I did not go through all 5 of the tips, so you'll want to go to moneymetals.com/news and check out all 5 of the tips as we move into 2025. And then also, of course, you can buy gold and silver online right from moneymetals.com and learn more about what we're doing. So I appreciate you, Stefan. I appreciate the work that you're doing and the integrity that you bring to a business that can sometimes be a little bit shady, let's be honest. So it's an honor for me to be able to work with the great team, and so appreciate
Thanks,
that.
Mike, and we're looking forward to 2025 and what it brings.
All righty.
Well, that will do it for this week. Be sure to check back next Friday for our next weekly Market Wrap podcast. And don't miss our second weekly podcast, the Money Metals Midweek Memo, hosted by Mike Meharry and available each Wednesday. Just check out any of our audio programs. Just visit moneymetals.com/podcast or find them on your favorite podcast platform of choice. Until next time, this has been Mike Gleason with Money Metals Exchange. Thanks for listening, and have a wonderful weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by to answer your call during business hours, Monday through Saturday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.